Hi, everybody. How's everyone doing? Let's have a good week. Hi, Galaxy and Arena. How are you? And Hugo, Kevin, Marco, how are you? Hiya, Brock. Hi, Amira, Didier, everyone. Okay, so here's the crude. Um, I think there are some things that, let me just move this out of the way. I thought we might get one more high because of this, but it almost looks like it's rolling over here. I think I'll wait on it. Maybe we'll get one more pop into Tuesday. But something that I am keeping an eye on fairly closely is going to be in the yen, and it's because of yields. Okay, the yen's higher today. I want to see what happens here, maybe around 109.5 or so, because the yield narrative is getting pretty long in the tooth here, and something I pointed out last week is that we're starting to get, we actually have a 3 driver here on the 2 hour. A little bit of confirmation here, but it's pretty clean looking here. Looks like we're going to get another push up in yields here, but I think we're in a topping mode in the yields as well. And gold bulls want to pull for a peak in the yen and then a decline in the yen. That should be add some jet fuel to the metals. Euro pound is at very significant support. I here again, I'd like to see if we can take out this low here, which was confirmed. We will not confirm if that happens here in the next couple days. And I want to give the dollar the benefit of the doubt, but we need closes back over 92. As you can see, 92 is going to be a pretty big area, held where it had to. And until EG makes a new low, Euro is still the preferred short. Okay, I still think Euro's heading lower, and this is really the main reason. Look at this low that we had in the Euro here. Everyone see that? What kind of low is that? Hugo, Paul Smith, how are you? Confirmed it is. So we should take it out. I don't feel like it's the greatest spot. Last night may have been. But, I've learned that some of the stuff I do on Sunday night and Mondays, I'm always better off waiting for, prime trading days for the kind of stuff I do. Seems to start with Tuesday, Wednesday, Thursday as being the key kind of trading days. Sometimes, of course, I catch a move on Sunday night, but I think a lot of my problems on trades that don't work out is doing something on Sunday night. I don't know if you guys have noticed it, but you have small participation. There's always exceptions. It would have been okay to sell the oil last night up here, right? You know, have a nice little lead here, but turnaround Tuesdays, and if I'm a reversal trader, the pattern is usually whatever happened the week before, you get follow through early in the week before any kind of inflection point or turn. Metals are acting okay. I mean, I thought that was a pretty impressive day that we had in on Friday. The way it fought its way back, it traded. If you look at how the gold traded Friday, okay, from when it was under pressure early in the day, it traded exactly with the S&P. See that? It had the same type of thing. So I mean, the gold is trading pretty closely with the S&Ps. It seems to be trading with risk on. Okay, so any risk off is going to be might be a problem for gold. But I did some work and some intelligence gathering over the weekend on the S&Ps. And I want to tip my hat to Andre, and Blake brought it up last week when Andre said, this could be some type of head and shoulders that we have here in the S&Ps. And as long as we hold 3880 or 3900 was a big area here. Looks like we're turning a little bit lower, but you just take the measured move 3720. You could either have some kind of neckline here. I think Andre was talking here. So, that's 180. That takes you almost up towards 4100. And 4100 is now what I'm looking for, even if we get some type of ABC here and we hold 3880, the market's okay. Under 80, there's something else going on. In fact, back under 24, I think will trigger something towards this 3880 for shorter term stuff. For longer term tops, I'm seeing from a lot of people I've interviewed and people that I talk to about the markets, seems to be a lot of agreement for a move over towards 4100 sometime early next month. So we'll see how that happens. So I'm going to be, laying off that short side trade until that scenario unfolds. It'd be hard for me to believe. So there's some conflicting things. Is the dollar going to keep going up while the S&Ps rally another, what was it, about 4%? That's the conflicting part of this whole thing. But the dollar to me is kind of like an I don't know. This tells me that I should be long, right? And this tells me I should be short euros. So long, the RSI stuff is saying, be long the dollar. And I'm not right now. Yeah, so Ben, we could get, that's something Ben Maldonado talked about, that um, we could have a dollar rally and a metal rally at the same time. We'll see if that happens this time in that way. So I have an excellent guest. You guys have probably heard Adem, Twitter handle at Radical Adem. I've never, this guy's the most voracious researcher, one of them that I talk to here and that I interview. So, it's going to be interesting to see what's on his radar with everything going on with the, everyone's starting to talk about hyperinflation, et cetera, because of the COVID relief bill. So we'll see. Right now, my highest conviction trade is looking for a short here in yen. I just don't think we're there yet. And it's really based upon that I think yields have, done their thing. It's been a tremendous move, but I think that they're in some type of topping mode. And why can't we pull all the way back to here in yields? I don't know if that's going to be because of risk off or that the market may like it with interest rate pressure coming off the market. So that to me is an unanswered question. But I do think that we're nearing this peak. Take a picture, it's pretty classic. Not all three drives work, or, I'd be retired. But I look at the form of this and it looks like a three developing. You have to wait for some of the short term stuff. Sometimes you could get a fractal of a three, and maybe this is the fractal of the three, maybe this is one and this is two, and we get one more shot up for one more marginal new high. And came into this week without a lot of conviction, nothing that I want to like bet the farm on, and you should never want to do that anyway. But that's my outlook coming in this week is some type of yen short, 950 to 10, 110. I think there could be a pullback to say about 106.50 after we peak. And the oil, if the S&Ps keep rolling and oil doesn't, that's something else. Oil should lead the S&Ps down, just like, really, it's been leading them up. It's even when the S&P was in risk off mode, the oil kept going. So any questions on anything I say? Ben Maldonado thinks that can happen. Yeah, Jay? Gold's still going to have to prove itself over, this breakdown comes in at 1760. So we start closing over 1760. Yeah, I know you're long gold. 1760 was a big breakdown and it tested it here. Let's see what it can do if it gets up there. That's really going to be the battleground. That help you, Jay? Okay. So good evening, Blake.
That's funny. Good evening.
Good evening. It's so dark outside.
Yeah, it's dark out. Yeah, it's really dark out. So we had a time change, and if because of the time change, it really screws me up. Nobody else in the state of Arizona where I live is screwed up because we're not affected by time change. Time changes. Nobody adjusts their clocks or anything. Nothing. So for me though, I'm adjusting time with the rest of the world, or at least with us in the United States. Hey, isn't it Europe that waits another 2 weeks? Isn't it? Isn't that the case?
2 weeks.
Yeah, it's 2 weeks, right? So we have this really funky time then. The next 2 weeks where we have our for us ForexAnalytix, our viewership's a little off because like people in Europe can't adjust their schedule to us, because they're used to the normal format, and it's like 2 weeks of like lower viewership and participation, and it's kind of, we've found that to be very common over the last several years. But we did have a time change here in the US in 2 weeks. As Stelios points out, we'll make the adjustment in Europe, and then we'll be back to a normal schedule for most people. And for me, I have to live like hell for Dale, like in Dale's time zone for the next 7 months or so.
It'll get lighter out as time progresses when we get up.
Yeah, it's dark here for a while. It's gonna be dark here for a while. So right, anyway, I hope you guys all had a great weekend. We had a I want to say that it's so interesting. Bitcoin. I wanted to say this, and because I think it's so interesting. Bitcoin has a very similar following than the gold bugs did. All the last 20 30 years. Same people, different asset, same people. Dale, if you ever talk bad about gold, when gold was going from 300 to remember when we hit 1700, right before we let me go to gold really quick, just so we can kind of you can see what I'm talking about as we discuss it. Gold. Okay. So when gold was in this move right here, from, I remember when we were trading around 300, or, back in 2001, somewhere around there, right?
Yeah, it was the bottom.
Yeah,
right before Y2K, it bottomed. There was some kind of central bank agreement about not selling gold, and that was the bottom. I think.
It was somewhere right around there, and this rise here, especially like this rise, from 700 to the 1800 range, and that is I remember right here at the top, right around here, and I was broadcasting the morning edge that webinar, and anybody who was, and actually I bet there's a lot of you that are listening in right now that remember this from 10 years ago. I had one of my oldest friends, he called me up, and I told this story on the webinar. He called, and matter of fact, I'm actually going to go visit him in San Diego in like about a month and a half over the weekend. Our family's going to go hang out with him and go boating and stuff. Anyway, his dad actually called him up and said, he's in retirement. He's in Lake Havasu, Arizona, which is, not too far away from here. It's in between California and Arizona. Called him up and said, I'm going to sell everything. I'm going to buy gold. And gold was, trading right around the 17, 1800 level. And he called me up and he said, hey, Blake, can you talk my dad off of a ledge? And I'm like, what do you mean? And he told me the story. And I'm like, so I picked up the phone, talked to Mike, his dad, and, had a conversation. I'm like, I don't know if this is a really good idea to put all your money in gold at this point. It was at 1800. And I gave him the whole, it's gone up, all this, it's kind of hyped up right now. And it was probably about a month before we actually peaked, right around a month. And a lot of, like I said, there's people listening in right now that probably remember this conversation like 10 years ago. Anyway, and eventually, obviously pulled back towards 1,000, and then, we've rallied since then, and gold's done its thing. I think Bitcoin's in a very similar type of situation right now, currently, but heaven forbid you talk bad about it. Because I remember when I was telling this story and I was tweeting about gold, you can probably go back and see my tweets on gold back in 2011. I know some of you are savvy enough with Twitter. You could go find it and find those tweets because they're still there, because I don't delete tweets unless it's a typo and I need to just replace it. But the comments that you get when you talk bad about gold, or did back then, they're the exact same comments I get today regarding crypto. It's like you just fast forward 10, 15 years and replace the people. It's the same comments. It's the same, human psychology that we're going through. And I'm not saying that Bitcoin is this is it. It's over now. It's going down. We're a month out, and we're going back down to 20,000. I'm not saying that, but what I am saying is the what should I say? The
Technicals
and the attitude and the way people view Bitcoin, very similar to gold bugs. Wouldn't you say, Dale?
Yeah, it's a religion.
It is. It really is. But we have to look at it from a different lens. If you guys are traders, if you're a trader and you are trading the markets, you have to look at it through a different lens. And the lens that I'm looking at it and was looking at this weekend is, look, we're going to get a stimulus payment. Everybody wants to buy crypto. Like, think about like I was explaining this in the week ahead video, Dale, and I'm not sure if you listened to it this week, but it's like, think about the person that got a stimulus check that didn't need one, got a job, make $80,000 a year, $100,000 a year. I'm fine. I've been fine through this whole, pandemic. Yet I keep getting checks. It's great. Like what am I going to buy now? I mean, nothing's changed, and I've actually been saving money because I haven't been going out to dinner. So, all the time with my family or my wife because of the pandemic. So I'm fine. So I get this check because apparently I qualify. So what am I going to do with that money? Well, hell, let's put it. I mean, I keep hearing about this Bitcoin thing. Let's put some money into Bitcoin. Or, I keep hearing about the stock market hitting all-time highs. Might as well just take some of this money and plow it into the stock market.
Yeah, buy some GameStop.
Buy some GameStop. Man, want to buy some AMC. I mean, what the hell? Why not? So
free money.
with that attitude prevalent, Here we go with Bitcoin, rallying above it. We were at 58,000 on Friday. I figured we were going to rally above 60,000. And if you follow me via Twitter, you saw that. And then, we hit the 127% extension, or really damn close, but there's a lot of take profits around there. And now you're starting to see a little bit of reversal because yes, yesterday, India said that they're going to be blocking crypto. And I was just telling the guys and gals in our chat room this morning, and here's the Forex Analytics chat room, guys. I was telling them a little bit earlier here. We were talking about crypto. It's been such a slow morning. Anyway, I'm just going to put that back up here. We were talking about how, it's just a matter of time. It is only a matter of time before cryptocurrency gets
halved.
The G7,
the other kind of halving.
They're going to regulate it somehow. They're going to tax it somehow. And if you don't think that's coming, you're crazy. In my opinion, it's the government. You could go ahead and say, well, if my government did that, I'm not going to stand for it. I'm moving. Okay, go ahead. They're not going to stop you. And I can guarantee you 99% of you will not go anywhere. You're going to stay exactly where you're at. You can, get upset if you want, but in all actuality, are you going to, remove yourself from where you live and move somewhere else because your government blocked you from buying or selling crypto? No, you're not. Let's face it. You're not going to. You can talk all the crap you want, but you're not.
Then it's too late. By the time they want to put you in a FEMA camp to leave. Right. All right.
But anyway, but the point I wanted to bring here is I'm actually looking at Bitcoin pretty closely because it is, as I mentioned on the week ahead video, and you guys know how I feel about it here, it is the ultimate risk asset. And not saying that it's the riskiest asset. I'm just saying from right now, perception wise, if you want to take on the most risk you could possibly take on, buy cryptocurrency, because there's no for sures about it. And you don't really know anything more than what you hear from other people about it. Nitish in our chat room says, people in the industry or, and his friends, are laughing because it's like you're paying 60 grand for something you can't see. you can't hold. It's like, yeah,
it's a great
believe
concept.
anything you want, but I got this crypto wallet that it appeared out of nowhere and I own it. And, I got this thing apparently, and it's on a ledger somewhere in the ether ish. But yeah, I'm going to pay 60 grand for it. Okay, well, go ahead. That is the most, that is the most risky thing you can do right now. And so whether you believe it or not, and like I said, I think Bitcoin's actually, there's value to it. I don't know if I'd really want to pay $55,000 for it right at this moment in time. I'd rather go take a $55,000, $55,000 and go buy myself a new boat for the lake. But, that's me. I don't know about you, but anyway, my opinion is below this 52,000, that's where things get a little hairy. Technically, we're in a bit of a wedge. We just hit a new high. And it was very divergent. So this was the previous 618 retracement. Just be careful, because if we start breaking through 52,000, then, again, we have to look at Bitcoin through a different lens. It looks like more of a risk asset that might be under pressure. I just realized I talked way too much and I forgot Steve Stelios. Good morning, guys. I'm so bad.
Good morning, Steve.
You guys are just letting me go.
Yeah. Well, why stop somebody who's having fun?
Oh, I wasn't having a good time. I'm just talking. I'm talking because I'm half asleep. It's 5:24 in the morning here. So where's Steve?
Yeah, Steve is he's gone to a friend's place because it's a holiday here in Greece, but I'm working. Obviously, he's not. No, I'm kidding. He's at the place where there's no internet or very bad internet, so he's not going to be on the webinars.
Oh, okay.
Yeah. But anyway, right. I'm here. I think we may have Grega on the Morning Edge later on.
Great.
But I wanted to say, you were talking about crypto. I could not agree more about what you said about the kind of people who like metals and who like cryptos. It's like a religion, but it's it's very difficult for me, at least. It's difficult to understand what's driving people behind crypto, apart from the fact that it's something that's been moving a lot and making people a lot of money. And I have a couple of friends who I've discussed crypto with for the past year or two, and they're kind of the same opinion as me. But they both said, heck, I'm going to buy some because I think it's going higher. I want to sell it. I don't believe in anything else. I don't believe it's going to change the world or replace the dollar or something. And they've made shitloads of money. And well done to them. They have bigger kahunas than I do. But, as with everything, I think as long as you understand what you're doing and the risk you're taking, go ahead, take the risk. And make money.
Exactly. Like, if you want to buy Bitcoin right now, fine. If it gets below 52,000, you probably don't want to be in it anymore. You know what I mean? So your risk, right? It's like
absolutely.
As long as you can, that's anything with trading. I mean, as long as you know where your risk is at any given point, that I like to call it the line in the sand. If you're, if you're line in the sand, or you can call it the bull bear line, that, hey, as long as the euro dollar is above 115, it's bullish. As long as, Bitcoin is above 52,000, it's bullish, but it gets below 52,000, probably not going to be, technically, it's not going to be bullish anymore. And one of the most technical, I think, assets in the markets right now are cryptos, because, algorithms just haven't found their way over to Bitcoin and other cryptocurrencies in mass yet. I say yet.
Yeah.
Right.
Yeah.
So anyway, what else are you thinking this week, Stel? We got just a couple minutes before Dale brings on his interview and does his interview this morning. What else are you looking at this week especially with the Fed coming up?
Yeah, clearly the Fed and the is it the Bank of England as well? I can't remember.
Yeah,
BOE, I think.
BOE, the Fed, and Norges Bank. I mean, we have these. Obviously, the Fed is the important one, and we have to wait and see when does the way Powell talks about yields and about inflation. When do things change? Because at some point, the rhetoric is going to change a little bit. Where is the pain threshold? Where is he actually going to start mentioning it in a different way? And I think we're not that far. If we get 10 years creeping towards 2%, which is really where they're going now, I think. Then
I mean, look, we got the 10-year above 160 this morning, and we're just right at our highs. It's like you look at bond yields, right, and you're looking at the 10-year, and it's on my screen right now. Think about it as, forget its yields. Think about it as being Google, or think about it as being the euro dollar, or think about it as, if you're looking at this chart, forget its yields. Whenever you get a rally and the pullbacks are very shallow, like we're seeing, I mean, think about that. This is
nice uptrend.
Yeah, I mean, it's a great uptrend. This is a few days worth of data, and it's not pulling back.
I mean, higher highs, higher lows, and shallow pullbacks. What more do you want?
Yields are going higher. So as you were saying, Stelios, at what point does the Fed go, what the fudge-sicle's happening here, and what are we going to do about it? Are you in the camp, and this will be just a real quick question before Dale has his interview, and do you see the person you're interviewing, Dale?
Yes, Dem is here.
He is here. Okay.
Yeah.
So at what point then does the Fed say, we're going to roll over and we're going to have to, change our rhetoric here, or do they go the route of yield curve control? What do you think, Stelios?
I think the Fed is probably going to wait until we get some kind of correction in equities. When we get that, then they're going to step in. I think as long as equities don't seem to care, obviously, unless 10-year goes to 3%, but if we just grind towards 2% and equities do nothing, they're going to stay put. That's my view, and I don't blame them for doing that.
I'd agree with that, but let's say, I think, and it happens every time, especially in the, it's usually from the the talking heads on Bloomberg and CNBC, and you'll start to hear a chorus of different people coming on, especially if if you're looking at the S&P and you get once you get an over a 10% correction, that's when you start to hear about it. Like, when's the Fed going to step in? When's so yeah, I mean, you think about where that's at in the S&P, you're talking about a move back towards 3,600. Then we're down 10% from the highs. Then, people start going, well, here comes the chorus, right?
Yeah. I mean, and if you think about it, though, if you look at the long term, 10% correction is nothing, absolutely nothing. But you know how things are. If we get that, then they're going to start getting a little bit nervous. They're going to bring out Bullard or whoever, and they're going to start yapping around, and that's the way it is. So I will wait for that. And our friend actually Jay is asking if I'm still long silver. Yes, I am still long silver from around 26 from these levels, and I'm looking to buy on dips. Or if we break out higher, I'm going to buy more higher.
So my oldest son and I are watching Band of Brothers, and
love that show.
Oh, it's great.
I watch it all the time.
I didn't realize it was from back in 2001, and the reason why I mentioned that, Stelios, is because in the very first episode, Hi Ho Silver. Remember, he was the guy from the guy from Friends, actually. Last guy you would imagine being their drill instructor.
Oh yeah, Ross.
Ross. Yeah. Anyway, all right. Hey, Dale, I know you got your interview. Hey, guys, just want to mention really quick before I let Dale take over. We will be broadcasting the second face webinar, which is also known as the Morning Edge now. That's going to be broadcasting in 45 minutes right here. For those of you that are ForexAnalytix subscribers, remember, visit our ForexAnalytix sponsor, the webinar sponsor. That's Pepperstone Securities. They're one of the largest FX brokers in the world. To open an account, if you're outside the US or Canada, click this link right here to open an account. If you open an account, you can get up to 4 months free of ForexAnalytix premium service, 2 months initially, and then another 2 months based on you have to trade 500,000 in currency, which is, not very much. You'll probably do that in 5 trades. And then once you do that, you get another 2 months of ForexAnalytix for free. So, and the premium version. So check it out. Visit our webinar sponsor. Thank them for allowing these webinars to continue. And Dale, it's yours. Stelios, thanks for being here. And
thanks, guys.
I guess we'll see Steve tomorrow, I'm assuming.
Yeah.
Okay. Good hunting today, Stel and Blake.
Thanks, Dale. And back to you guys. And yeah, have a great one.
Hello, Adem. Welcome back to Face.
Hey, how's it going, Dale?
My trading warrior brother with the most voracious appetite I've ever known for knowledge about esoteric things in the financial markets. That's my description of you.
Well, I always appreciate it, and
So what's on your radar? We have this 1.9 trillion COVID relief. You want to share your screen, Adem? It's that green box.
Wait, hold on. I'm sorry, Dale. I hate to interrupt. Adem, hi. My name is Blake.
Yeah. How's it going, Blake?
Good. I was just looking at your Twitter handle. You're in Scottsdale. I'm over by Carolyn, so I'm in Scottsdale as well.
Wow, nice. Yeah, I'm up on. I'm actually right by Carolyn too. I used to work at that hotel right when it got open, the Westin.
Oh yeah. Well, I actually live on the Cactus and 101. That's where I live, but I'm up in this area. So
yeah, I'm on Rain Tree 101. But yeah, we should definitely meet up sometime.
Yeah, let's do it. All right. Hey, nice to meet you, and thanks for being here. So I'm going to let you go.
Great, thanks, sir.
Did you go to ASU? Is that why you were in Arizona?
No. My dad. I was born in Jersey, but my dad and my mom hated the cold.
Yeah.
So they just, when I was like 5, 6, they took us out to Arizona, and just been here ever since.
All right. Okay, so you want to share your screen now? It's that green.
Yeah, let me get that going. Cool.
So we make friends here on Face too. Okay, the corporate bond market. Okay.
Oh yeah, this is just my site right now. Let me.
All right.
So yeah, I guess last time we talked, just to get trades out of the way. Last time we talked, I think the last 2 times you we talked, I told you I was really excited on uranium, and finally got out of that trade. Those calls, after 2 years of expiring worthless, finally returned money. I got here's a chart of the Cameco, which now uranium's in like a 5-year breakout. I don't know if you can see the chart I'm showing. Yeah, so in the beginning of the year, you were able to, an investor, a speculator could have locked in 1 year calls, when the stock was at like $9. And then finally at the end of the year, like with 3 months left until expiration, these things, went up like 100%. So got very lucky.
Congratulations.
Yeah, I mean, it's
I'm not against luck.
No, yeah. See, a lot of people, like, when they ask me, like, questions on markets or anything, it's always, it's anyone's, at the end of the day, anything can happen. There's black swans lurking everywhere. So as long as you're positioned to let your upside run unlimited and your downside is capped, I'd rather be wrong 9 out of 10 times, losing a little bit of money, but have the chance of making, 10, 20x returns, versus making a small, consistent gain. Like the modern portfolio theory, it teaches everyone, make 2-3% a month, but then once every year or two, you lose 25% of everything, or go bust.
Yeah.
So,
I remember last time you were on, you were also talking about taking some very long-term bullish positions out of the money in the dollar.
Yeah, so that's worked out really well. We talked, my specific plays were short the Swiss franc and the euro. And here right now, the Swiss franc year to date has gotten crushed after rallying everything with the reflation trade at the earlier. Well, it's still going on, but it's like I haven't seen the market believe something so fervently since when the Fed was tightening in 2018-19 and the yield curve inverted. Like everybody was like saying like, oh, yields are going to go like way higher, and yields today, they're going higher, but there was a good saying I've heard. It's not since 2008. It's not, or actually since 1980s. It's not that yields don't go higher. It's that they don't stay high long enough. Like they go up a bit and then they don't stay that way and they keep falling. Same with inflation.
You think it might be different here this time?
No, I really see. My opinion is, I have a friend of mine who, they're like, how do you not see inflation coming? Like, look at input prices, but we still haven't seen it really trickle in yet. And I mean, besides food and stuff, but the thing is, there was bad harvest this year, and there was limited supply of food because of the farming. There's supply bottlenecks with the pandemic. So if you in Peter Bernholtz's book, Monetary Regimes Throughout History, it's a great book. Pull it up on Amazon. It's a must read for.
Okay, and that's a great endorsement because Adam's read all of these. Yeah,
that's a great book. I highly recommend it I think inflation is something that's extremely tricky, like reflation, inflation, deflation, price waves. This book, Monetary Regimes and Inflation, History, Economic, and Political Relationships, it's kind of pricey right now, so I don't know, maybe find a PDF online.
Find it in paperback.
Yeah, like, I thought it was worth the money, but the author, he basically says that he doesn't consider like food and other things as inflation because that could a bad harvest, and throughout the last 1,000 years throughout history, like Malthusian Malthusian trap, it used to be like food was the greatest thing standing in the way of standard of living, because over the last 1,000 years, if there was too many mouths to feed, like usually, so the 3 great deflators was war, plague, famine. So one bad crop failure or one big war would like cut the population, and all of a sudden you have standard of living, real wages rising because you have so much output, like in the world you have so much land, but then like all of a sudden 20% of the population dies in war, or like the Great Plague was a big one. It rose real standards of living because wages went up because there was less workers, so workers were able to pick their wages better. There was food et cetera. So throughout history, main price waves came with food. And what's strikingly is last time I think we've talked about this twice already, so I won't stick too much on it, but I think it's so important that people understand the great inflation waves. In this book, The Great Wave by David Hackett Fisher, this book right here, when I got into the like macro world back in 2012, my like old mentor told me to read this book, and it shows like interest rates for the last 1,000 years and how in Britain they were down to like 2.5% in the 1700s. But I thought the real meat of this book is it shows the 4 major price waves in history, and it's basically each time it started up until the 1800s when the first industrial revolution occurred. There was more technology and advancement and like goods being made relative to people being born. So back then, people being born was like the bottleneck. If you had too many mouths to feed, if war wasn't happening, people would procreate more. And then there would be demand pull inflation. Remember, there's 3 types of inflation. You got supply side. So like if oil prices, dropped 50%, you would see an equivalent, or not equivalent, but a drop in the gasoline price or input at your, whatever business, your transportation business. Yeah. So that's the supply side. So 1970s inflation mainly was driven by the supply side because, the Saudis did the oil embargoes after the Suez Canal, the issue with, Israel. But, and then there was also commodity shortages because of years of post-war demand issues. But then all of a sudden you got all this new supply come online, and then, not to mention on the demand side in the 1970s, you had unions, very strong unions. You had standardization. Japan and Germany beat out, basically Nissan and Volkswagen were overtaking, Toyota, Dodge. That's when the U.S. car manufacturers really lost their luster. When standardization, post-World War II standardization, a decline in creative destruction. Alan Greenspan's book, Capitalism in America, does a great job really showing the bottlenecks that happened in the 70s, the 50s to the 70s that really led to inflation. And while breaking from the dollar did help, the U.S., it's not that inflation wasn't happening, even while we were on the dollar standard, the Bretton Woods, the U.S. was exporting that inflation abroad. So they had no choice but to break from gold. So post 1970, though, like end of 1970s, we've been in the age of surpluses. So a great chart to really highlight this is, do I have it up here?
Can I interject that, a lot of people are very bullish, especially the grain markets. They've had tremendous runs at them.
Yeah.
And you were talking about that inflation. The big push used to be before we were, now we're past the Industrial Revolution. We're in the technological revolution. What is this? The fourth turning, whatever that book was.
Yep.
So now we have grains really exploding. I mean, the beans, went to $13-14 from $8. I mean, you have doubling of grain prices in the last year or so. Could that be the main suspect for another wave of inflation? And people already talking about that there could be food insecurity for the world. I mean, most of the world, a lot of the world already has it, but advanced Western economies haven't had that type of food insecurity, although there are families getting in food lines due to the pandemic. The grains, long-term charts, monthlies, weeklies look pretty constructive.
Yeah, so that's definitely true. And food prices, have started going higher. I think they're at like a high, like a 5-6 year high. But also a lot of that is driven by, remember in 2019, China had that big hog culling because of the African swine flu. So now they have to import corn, which was already in supply shortages because corn prices had got crushed between 2018 to basically before the crisis. So farmers weren't planting as much. And yeah, like you said, they were having grain shortages happening. So, it's like Jim Rogers used to say, low prices are the cure for low prices and high prices are the cure for high prices. We're in like this area of surplus. Food is, like this year, bad harvest plus extra demand from China, especially with them rebuilding their grain supplies, and they were rebuilding everything. But the thing is, it was short lived. China's already tightening, so it's hard for me to really see, like this chart I pulled up. It's capacity utilization of manufacturing, and after the 70s, as you can see, it's just been pretty much like a slow decline, with big, dips and rebounds, but it's kind of been like a downtrend after peaking out in, 73, 88. Now it's back down to 74. Basically, there's a ton of excess capacity that can come online. So when I see people talk about inflation, I think to myself, we're in a world where people are hoarding the dollar. Like demand for reserve has increased exponentially since the Asian contagion crisis in the late 90s. Like, I think world outstanding dollar liabilities, like claims, was like 900 billion at that point. Well, it's at like 7 trillion today, and it's only gotten more since 2008, because countries like China, they're like, hey, I don't want that problem. I want to have a lot of reserves. And what sucks about being the US dollar, they say being the reserve currency is an exuberant privilege. And it does come with its perks, as if you can, you make the sole money in bonds that the world needs. But at the same time, the US has to constantly run deficits. Imagine if they said, hey, we're going to come out and balance the budget. This is what Robert Triffin said in the 1960s why Bretton Woods would break. It became known as the Triffin dilemma, because he said the US can't focus on its domestic policy of running a budget surplus, because if they weren't running deficits, they wouldn't be exporting dollars into the world. We have to buy more than we consume to put dollars in the world for everyone to have those dollars. Like, what do people want to save? How would China and Japan and Germany, etc., have dollars liquidity to purchase their goods if they didn't have dollars? So the US has to run deficits. And in Michael Pettis' recent book, Trade Wars or Class Wars, which I mentioned last time, that was like my favorite book of 2020, he shows how there isn't a shortage or a lack of demand for US dollars, and I think that's why a lot of people who are expecting inflation, or they're expecting, like, yes, US fundamentally, it's a mess. Like, does it deserve a weaker dollar? I mean, I think so. But that's not like the European Central Bank and the Bank of Japan and the Bank of England, or the PBOC, Chinese central bank, are going to allow that to happen. Macro isn't just thinking about your currency. It's, you have to think about every other currency in its own system with its own feedback loops, pushing, one, getting aggressive versus the other one, taking away, etc. So, we've seen the dollar rally. And I think, you and I last talked that we weren't going to be surprised if we saw the dollar rally, after the new year. And, we've seen that. We've seen it after hitting, lows recently. It's like shot back up. And
89.20. A lot of people were looking for 88. It did not get there. So 89.20 looks like the bottom. Then we rallied, pulled back to 89.75, and we're pressing the 92 level here.
Yeah.
So
and I think it could go higher, just because, the more advanced markets have gotten, the more fast reacting they've gotten, and everyone's pricing a distant future in today. Like, for instance, they keep saying we're going to get inflation, but the CPI last month barely budged. It didn't even, it's not like these input prices happened yesterday. Input prices, because of supply bottlenecks from COVID, have been happening for months. But, the CPI is still, relatively tame. And could there be inflation? Absolutely. But when I think of inflation, I'm looking at like what Peter Bernholz, the author of that book, said. And it's not like suddenly we get 3% inflation. I mean, you're talking about 1% higher than the Fed's target after years of low inflation. And I also think there is inflation, but the thing is, in the long term, it adds up. Like you and I talked about once, this is what happened in those 4 great wave cycles. Mainly, like, for instance, in the 1500s, new money supply coming after Columbus's raiding of, the New World. They brought a bunch of silver from the New World over. That new silver inflow over that 100 years had prices rising from added silver about, it was about 2% a year per average. And that doesn't seem like a lot. But if you're a consumer, after 100, these price waves went for 50, sometimes 75 to 150 years. And, over time, that 2% adds up. It's like when you go to the store, it's not like I see, I'll notice maybe beef is a little more expensive, but it's not like every month I'm going there, prices are doubling 5% or, going up 5% each month. It's,
What do
you know
you,
what I mean?
what do you think of this statement? Someone else that I've interviewed, very, insightful guy, said, when I asked him about the dollar, he said, the dollar can't collapse until it explodes, meaning that there's going to be, an explosion of the dollar. One of these guys saying, maybe that he didn't get price levels, but the explosion to me would mean like, the Dixie being 120. Okay, I know some super dollar bulls that are looking for even higher numbers, and he said that has to happen first before what everyone's talking about now can happen. What are your thoughts?
I personally don't. Anything can happen, and I always think
Right,
it happens the
everything and
least way
anything.
we expect it. But it
Right.
could happen. It absolutely could happen because, like I was saying, I get the inflation argument, and I do think there is inflation, and I do think it's eating away at purchasing power. Even if it's 1% a year over a decade, that adds
Yeah.
up. That's 10% of your income.
Right.
So there's clearly creeping inflation. But this idea, like that the dollar is, it's going to be hyperinflation. It's just like we're saying, there's huge demand for dollars abroad, and China doesn't want to be the reserve currency. Why would they want to? They run surpluses. Imagine them having to sit there and provide liquidity for the world, running deficits, and that's what everyone thought they were going to do post 2008. But sorry, yeah, back to your question. Yeah, I mean, I do think that could happen. I think that the dollar could, as some crisis happens and there's just overwhelming demand, like that's the problem today with the dollars. That's the Fed's not. It's that there's too much savings in the system. There's a glut of savings everywhere holding rates down. You know what I mean?
Okay.
It's not like, oh, we're having a shortage of it, the Fed's printing too much. It's that there's literally there's like so much of it that there's not enough. There's the law of diminishing returns. Joseph A. Tainter wrote one of the best books I've ever read in the 90s that really opened my eyes. It's called The Collapse of Complex Societies. And the two key themes in that, in every collapse, is the more complex a system becomes, the more fragile it becomes. And two, the law of diminishing returns is an important factor to focus in, because whether it's energy, whether it's industrial capacity,
whether it's QE. I mean, a lot of people know that for every the bang for the buck that you get on QE, it's not as potent as it used to be.
Yeah, okay. And same with China. So they're building these, and that's what Michael Pettis points out. And he says half of China's economy isn't consumption like the U.S. The idea was post 2008, like, hey, China, you're going to take over. You're going to be, carrying the world. And that was the big story in the 2000s, which really pulled commodities. And I've been bearish gold this year only because, and I own physical gold. I've owned a ton of it. And I have a friend who's like, oh, you're crazy. Like, with prices going up. But I got out of gold this year after 2000, just because I said, you have central banks for the first time in a decade being a net seller of gold. They're the marginal buyer. A central bank buying is the biggest demand for gold at the market. And not only
you liquidated your physical on that too?
No. I'm holding physical. Okay. That's just like my rainy day thing. I bought that in 2013 when I thought the world was going to end when I was younger. Okay. And I'm just holding it as like an insurance policy. I'll never sell my physical unless.
Yeah.
But a lot of people don't realize, also I see people say like, oh, we have, EMs like with debt going higher and stuff. I'm like, yeah, but by law, when you repay debt, I can't go to my debtor and say, here's gold. He'll say, sell your gold, then pay me in dollars, so no matter what, there always will have to be demand for dollars legally, unless the whole system obviously changes. And, could that happen? Absolutely. But it's not like the US would be in the same boat. It's like every country right now is in the same boat, trying to steal growth from each other. And now the euro. So for instance, with the dollar going up recently, you can make the argument, is it the dollar that's going up, or is it the euro, going weaker? So you have the ECB competing against the Fed. So you can't really say, oh, just because the US fundamentals suck, the dollar will go weaker. It's, hey, the European central banks or the Eurozone or Japan's or whatever, every other country's fundamentals suck even worse. So it makes the dollar relatively look good. that's the only reason I was long the dollar
Okay.
over the thing and short the Swiss franc and the euro. I just think
So-
these other countries.
Okay. So how about now, Adem? Anything new that you're looking to do that you have on your radar? Still favor alongside of dollar long term. Anything still like uranium, but you'd buy a pullback. And
So interesting with
chemical?
uranium, the price of uranium actually has been falling, the spot
Yeah.
price. So I'm kind of, I mean, it's so hard in this market today. Like it's just with everything is so bloated, just liquidity sloshing around, pushing prices up. Like
people are paying $500,000 for a tweet. They're
Yeah,
buying
that's-
tweets.
yeah, it's crazy. Like the Wall Street bets thing with GME, and you know,
Yeah.
there's one sec. Sorry about that. Yeah, no, it's crazy. Like you're having so much liquidity sloshing around. And remember, a lot of people don't realize that there's always the marginal seller for like GME. Like let's say there's a couple 100 million shares trading on that company, but on any given day, there's probably only a couple million shares traded. So you have probably 95% of the total stock sitting in people's brokerage accounts. You don't have people every day selling every account. You have like big institutional holders. Once those people decide to sell, you know, once there's enough, even that's how panics are driven. It's just when you have a little bit more marginal selling on that day than marginal buying, prices tumble. So
Okay.
when
Tell me if I'm right. Tell me if I'm right, because you know, when I ask you these questions, you're going to explanations, and I know you. When you have conviction, you just say what you're doing. You know, it's okay to not know and kind of be flat and not be aggressive in anything when the waters are murky. Is that kind of where you're at? That's what I'm sensing.
Oh yeah, I'm always at that point. It's
Oh,
I mean,
okay.
I make like 5 trades a year, and I hope, like the uranium one, I hope I can get 20 times, 20
Yeah.
times my money, and then I'm good for like 5 years, even if
And
every
do you
trade
have
after
it-
that sucks.
Yeah. Do you have anything on like that now?
So I really think just like in times of murky waters, I just look at the expected value, which is magnitude over probability, meaning look for scenarios that the market's not pricing in, that
like
if
that.
it does go wrong, you can make, for instance, if everyone thinks bonds are going to go, yields are going to go higher, it's priced in at this point. So like you could be right with the crowd, but I mean, it's already priced in. So if it does happen, you don't make as much. Or you could bet the other way, and let's say something goes wrong, and things happen much, people are wrong, the crowd is wrong much more, often than people realize, and you can make 20, 1 through 10 X returns.
Yeah, isn't it a perfect example? I mean, it was only a year ago we were talking about the U.S. going to negative rates, right? And look what happened. And now everyone's talking about yields have bottomed, and there's nowhere for them to go but up. So, we've done a 360 from the negative yield scenario to higher yields. So what you're saying is there could be a bet on the long side of bonds in the coming.
Yeah, that's what I would be. Look, I'm getting
okay.
ready to make a trade because
All right.
yeah, another chart I have up here, I was just, before I get out of your hair, I don't mean to talk your ear off, but if you look at real personal income excluding transfer receipts, meaning stimulus, I mean, it's still below, and it's going down recently, actually. So income, besides getting those payments, has been declining. So wages not doing anything. It's really hard to see inflation besides temporary supply shocks. That's not inflation. Just like we said, like supply issues happening, markets adapt, and there's a lot of excess capacity that could go online, and the point is, for anyone listening, from when you read a lot of history, you see how hard it is to get consistent inflationary pressures in a world of surpluses and globalization, because you could just import the deflation. So that's what I'm sticking at. I'm waiting for the market to go overcrowded, which it is at this point. I would rather bet going long-term bonds soon.
And how about getting short equities?
See, that's always tricky, just because equities don't even follow fundamentals at this point. So
okay.
while I agree in their high,
I know. Look, I bet against them.
Yeah. So I'm
I know
still,
what it's like.
yeah.
All right. All right. So, Adem, again, thank you so much for being here. I love that's really a nice saying, magnitude versus probability.
Yeah,
And
that's called expected value. Expected value analysis. It's a great thing. Yeah, magnitude payoff over probability, which is frequency.
okay, that's great. All right. Well, thanks again, my training warrior brother, for coming here and sharing your views with us. And I'll send you a DM on Twitter, and we'll get you back here. And really, lots of luck on your. I hope all your trades have a huge magnitude payoff.
Oh, I
And
appreciate it. And
yeah,
sorry to all your viewers. I didn't see the chat thing up. If you guys want to private message me your question or anything on Twitter at Radical Atom, feel free, and I'll try to get back to those.
yeah,
I just saw those pop up.
and it's Radical Adem, ADEM. It's not Adam, it's Adem,
Yeah.
ADEM.
Mhm.
To get in touch, and what a great follow. Follow this radical Scottsdale guy. All right.
I appreciate it, Dale, and everyone else.
All right, buddy.
Great, everyone. Have a good day.
Take care. All right, everyone. I'll see all you guys for Turnaround Tuesday. Thank you, Brock, Monica. I'm glad you enjoyed it, Dem. I do. I feel enlightened every time I talk to them. And that's going to be a wrap. And you could join everyone for the Morning Edge. Thank you, Nuno. I'll let Adem know in 15 minutes. Adios, everyone. You're welcome, Monica.